Should you buy the dip or should you get out now? Is the market still going to crash? Is it going to bounce back up? Is the Fed going to save the market? I mean, these are questions I get asked constantly. I have a private community where I help people navigate this and give them specific recommendations. And today I am giving you the video address that I gave to them, and I'm going to give it out to everybody because this information needs to get out there. You need this information. You're a subscriber to my channel, and I want to give you this value. Now, in this video, we're going to cover the most important metric for gauging the virus. All right, I'm going to show you the tool that I use to pinpoint when it's going to hit maximum peak, and it forecasts when the pandemic should hopefully subside. I mean, I'm going to tell you what all this means to the market. Of course, we're going to go through history and look at some historical charts from previous crashes in 1929, 2000, 2008, and most importantly, I'm going to show you what you should expect for the short term. I'm talking 3 to 6 months, what you should expect for the longer term, 1 to 3 years. And I'm going to show you how to play this so you can set yourself up for life. I'm talking about the sell of a lifetime, the opportunity of a lifetime. So we're going to go ahead and jump into the video. If you want to know more about how I send this information out to my private community, look in the description for links down below. Otherwise, enjoy the video. I'm bringing you a update on the markets today. The markets are all over the place. Today is April 1st, April Fool's Day, and this is no joke. I'm not going to be joking with you. I'm bringing you nothing but the facts. I want to let you know exactly what we should be expecting in the short term. The short term being next couple of months, 3 to 6 months. What we expect in the longer term, that's about 1 to 3 years. I'm going to look at some historical charts for reference. And then, of course, I'm going to tell you exactly what to expect. And even more importantly, I'm going to tell you how to play this. Now, normally I do these live on Friday. I put them in the group. I do them live, I do question and answer, etc. But because today is the first day of the month, like I said, April Fool's, it's also yesterday marked the end of the first quarter. So all financials are reported in quarters. And so yesterday was the end of the first quarter. It was the worst quarter ever. Worst quarter ever. It's a lot. And so anyway, I have a lot of info to go through, a lot of very important info. I'm going to go through a lot of charts because I like to look at the historicals. You know that. And so I'm not doing this live. I'm not doing Q&A because there's a lot to go over and I want to get through it pretty quickly here. So like I said, the last day of the quarter was yesterday, the first quarter, and it's always an eventful time. That's when companies are scrambling, trying to meet their numbers. Money managers are trying to rebalance their portfolios. You should be rebalancing your portfolio. If you don't know how, well, join the 4-pillar blueprint. You should be rebalancing your portfolios if you need to. Yesterday, like I said, closed the end of the quarter and it showed pretty bearish marks for the markets, bearish for pretty much all the markets across. Today opened up quite a bit lower. It kind of gapped. I've been talking about that. It's where the market moves so much overnight that it opens up with a big gap. And so that's because of the way it ended yesterday. Today, the markets moved about 100 points, the S&P about 500 points. It's a considerable move. We're going to be getting the first batch of the quarter one earnings soon. They should start coming out. And we're going to really see kind of our first look. It's going to be our first glance at how the coronavirus has affected all these different companies' financials. We already pretty much know. Zero, right? They haven't been open. They've been forced closure. So anyway, we're going to have a good look at which companies are the hardest hit. And I expect those earnings to be pretty ugly, to say the least, right? I think we understand that. When we wait for the quarterly earnings to come out, we call them earnings seasons. Some people are calling this the no earning seasons, and it's not about a joke. But we have to remember what the market is. And so the market is a discounting mechanism. So the market is always trying to price in what's going to happen. So as soon as the bad news started breaking out, the market started dropping. The markets were trying to price in, get in front of, front run the price drop. So they knew that these companies were going to shut down. They knew that numbers were going to be off, and that's why the stocks sell off, because they're trying to discount the future. All right. So some of this should already be built in, should already be priced in, but I don't think it is. I don't think they've priced it in because nobody really knows exactly how far and how deep this goes. Now, of course, Wall Street has a team of analysts paid, they spend millions, billions of dollars. They're probably there at the hospitals taking notes, and they're all trying to figure this out. And they're just trying to discount that. So we have to understand what's really going on, what's really going to happen in the market. And I always try to break it down super simple. So we know that markets stop going up when there's no more buyers. Markets stop going down when there's no more sellers. And markets stop going down when there's good news, right? We need good news to come out So we need good news about this coronavirus letting up finally. However, don't expect that just yet. I'm going to let you know exactly what I think we should expect. So I'm going to take a look at that, and I'll let you know exactly what I'm seeing. I have good news and I have bad news. So I do have good news, and I'm going to tell you that. The bad news is, though, that I expect it to get worse before it gets better. There's a new report that's gaining influence in the White House right now. They're projecting 100,000 deaths in the U.S. They're saying this report should be released later today. Now, just to put things into perspective, in 2018, flu season killed 80,000 people. So it's just about a heavy flu season. It's a little bit more than a heavy flu season. I think numbers might actually come down lower than that, and I'm going to show you why I think that. But anyway, that's what they're projecting. They're about to put that report out today. Again, more bad news. So what's going to happen when that report gets released, right? We already saw the social guidelines, the social distancing guidelines have already been extended. We were hoping they'd let up early April and maybe business would start getting back, but now they're saying it's extended through the end of April. So what that means is that the bull market, this V-shaped recovery everybody's hoping for, it's not going to be emerging anytime soon. And I think the market's telling us that we haven't seen the bottom yet. But it's not all doom and gloom. There's some good stuff out there, so it's not all doom and gloom. There's patches of good news out there. So some of the patches that we've seen is that, China, for the most part, is pretty much open for business. So I've had reports extensively throughout the industry. All the factories are basically up and running. We know that like Starbucks, McDonald's have opened up all their facilities in China. And so, there was about a 3-month hiatus, but it appears that they've gotten over it. They're back up to business. We've also seen that the infections in Italy seem to be tapering off, or at least leveling off. And I'm going to give you more on that. I'm going to explain what that means. In the United States, it's a different story, right? The infection rate continues to grow exponentially. I mean, it's skyrocketing. Of course, we just started testing. So of course the numbers are growing exponentially. Now, 2 weeks ago, there was like 4,500 confirmed cases in the US. Yesterday, there was 163,000 cases. That's like a 35 times increase in just 2 weeks. But that number is super misleading. Like I said, we just started testing. We weren't doing any testing before. So of course, once we start doing testing, we see the numbers skyrocketing. And so I'm here to tell you, being a numbers guy, being a data guy, been looking at this stuff for a long time. I don't believe that's the right number to look at. As a matter of fact, the infection rate, the number of cases is the wrong number to look at. So what we want to be looking at least for us, because we're trying to project when the back side of this is. When will the market bottom? When do we want to start buying back in? What dip should we be buying? And that's the question I get asked all the time. So what we want to be looking at is not the cumulative cases, not 4,500 and now 163,000 cases. We want to look at the amount of new daily cases, all right? That's the number that we're looking at. And we use something called an S-curve. I'm going to put it up here on the screen. So we use something called this S-curve, and this is in Korea. And the S-curve explains, it's a pattern that explains how new technologies, social behaviors, or viruses move into a population. All right? It's the key to measuring exponential growth processes, which is exactly what we're seeing, right? It clearly is. So it shows how things are going to slow down. And we can take the country that handled this the best, and so far that's been South Korea. They've seen the virus basically completely recede, completely go away, and it followed this classic S-curve pattern. It's the growth of total infections. Now, you can see here that the 10% acceleration point was between February 24th and 25th at around 900 cases. And then it hit the maximum growth rate just after March 2nd at around 4,500 cases. That's at the 50% rate. Then it hit the end of the acceleration phase at 90% between March 9th and 10th at 7,900 cases. All right, 8,000 would have been the projection, 8,100. So right there, right in line, following that S-curve perfectly. And then it grows much lower into the 99% peak around March 24th. And then today, it's about 9,000 right on projection. So it's following this S-curve perfectly. The clearest point to project is at the 50% mark. Like I said, we saw that at 4,500 cases, and you can measure, that's where you measure the daily growth is peaking. So that's the peak of the S-curve, and that's the daily growth, which is why we want to look at that. And it did that between February 29th and March 3rd, and closest to that March 2nd date. So using that, we can look at other areas. So then, for example, we can look at Italy. So let's take a look at the Italy S-curve chart. And what we see here is that, and we're looking at Italy because right now it's like leading the world, right? It's the worst death, it's the most acceleration. But what we can see here from this chart, when we look at the daily cases, is that we can see that we're hitting the 50% point. It looked like we hit it a week ago, and now we've kind of got this like double top. So we're kind of adjusting our numbers a little bit, but you can clearly see we've hit that 50% point. And so based off of that, we can project a 90% slowdown. You can see about 126,000 cases right around April 7th. All right, so that's kind of what we're looking at, and based off of this peak being March 21st to March 24th range, it says the peak is somewhere about April 20th. Now, of course, this is just a projection, but based off of this, it's been, this is a way that we look at all types of cycles, including viruses, and it followed it perfectly in South Korea. And based off of this, that's what it's looking like, and potentially could be 20,000 deaths, right? And again, we don't know, but that's kind of what it's looking like. And I'm not a doctor. I'm not here to debate the medical side of this. We're trying to figure out what we should do with our investments. But you can see that with the market peaking right there, it should coincide with the bottom of the first market crash of about 40%. That happens about 2.5 months after the crash. And I'm going to show you some of those charts. All right. Now, I have to study all this stuff. I have to study all these numbers because, like I said, it's the key turning point, right? There's no amount of money that's going to fix this. The Fed, the central banks, they can print unlimited. They already said, right? QE infinity, unlimited money printing, but no amount of money is going to fix this, right? We need this to slow down. We need this virus to stop. In the U.S., I don't think we've seen the 50% yet. In New York, which is the epicenter, it looks like maybe they're getting to that 50% level, but now we're starting to see it in other areas. So we have to still wait and see what happens in the U.S. before we can really know what's going to happen. Now, if you've been following me for any long time on YouTube or on my newsletter or in my paid subscriptions, you know that I normally focus on the long term, right? We're investors, so we're focused on the long term. But because of the environment that we're in right now, we have to look at the short term, all right? And not just because we have to look at the short term because information's changing day by day. The virus is changing day by day. What the Fed's doing is day by day. But also there's enormous opportunities if we get this right in the short term. And of course, I'm focused on that. And I think you are too. So what I'm expecting one more surge down. We know this from studying other market cycles that we typically have about a 40% crash in about 2.5 months from the peak, which is still a couple weeks ahead of us. And I think at that point, we're going to see a little bit more daylight. Hopefully we'll have a little bit more insight. We can see a little bit more predictable models. I want to show you some other charts. So we have this, this is the VIX. This is the volatility index. And this shows how volatile things are. And when the markets were crashing, the volatility, it spiked, it peaked at 85, and that was on March 18th. Now this, again, based off of those S-curves and those models, it looks like it represents the 50% point of the crash. So that's kind of like halfway. And if we use that to project the bottom, which would be one more wave down, it puts us back into April 15th, which lines up with the other numbers that I've been talking about. And like I said, all the money in the world isn't going to fix this. It's not going to get the markets to bounce. Like I said, the economy is completely shut down. And so we need this to end, right? We need to see this end in the near term. Everyone's ready for it to get back to normal. I just don't think there's a normal to get back to, right? The markets have been so stretched. The debt levels are overstretched. The monetary system is overstretched. And everybody wants to blame it on the virus. But the virus is temporary. But the damage to the markets, the downturn that we're seeing, they're not temporary, right? It exposed the weakness. I think it was Warren Buffett says that when the tide goes out, you see who's been swimming naked, and it exposed the weakness in the most overstretched, most overvalued economy that we've ever seen, and it's the beginning of a depression. So what should we expect? What should we expect in the short term? Again, like I said, 3 to 6 months, and then what should we expect in the longer term, 1 to 3 years? It's not all bad. It's actually really good, and I'm going to tell you why. So let's look at we'll look at a little bit more historical charts, so I can tell you exactly what to expect and what to play. So in the shorter term, we're looking for a bounce. I think we're going to see a bounce. We're going to get some relief. It's a good way to One, if you haven't already got out some of your positions, it'll be a good way to unload them. I also think we're going to be able to make some really good profits by playing the bounce. All right, we'll be able to get in and out during that bounce and make some good money. So let me show you another chart here. So we have this one. This is called the megaphone chart. And the megaphone chart, we've seen this a few times before. We see this, you can see back in about 65 to 76. Basically, it's putting a series of higher highs and also a series of lower lows. We also, right after that, we had the crash of 73 to 75. And during that time, the market crashed about 75%. That's the biggest crash between the Great Depression and the Great Financial Crash. So between 1929 and 2008, that was the biggest crash that we had. And we've been watching the same pattern, this megaphone pattern, the higher highs, the higher lows forming in the last decade. And as you can see that on the chart right there. So it's making this giant megaphone. That's what that pattern is called. All right, now in this megaphone chart, you can see the dotted lines on the end, and basically that's kind of projecting where we're at right now. So you can see it, I'm expecting a little bit of a bounce right there, and I'm going to explain when and how that's going to work, and then a really big drop, and then another bounce. So that's kind of what we're expecting. Let me give you some time frames on that and let you know a little bit more what I think. But let's look at one more chart here. So I like to look at history to see how other markets reacted. So here's 1929. This is the Dow. This is the first crash. So the first crash went down 49% in 2.5 months, exactly what I'm saying. And then it retraced. It bounced 55% off of that first drop. All right, you can see a little red dot on the screen and it says we are here. So that's basically where we're at. And I think that it's, like a bear market rally, or some people call it a bull trap, where a lot of people think, oh, this is the time to go in, buy, let's go in long right here. And then it drops again. So like I said, this will be your chance to, one, get out of positions if you're stuck in them, but two, there's a tremendous opportunity for us to take advantage of these bounces and pull some good profits out of the market. So we're going to be looking at that, and I'm going to explain that. But what I think is that we're going to be looking for a bottom sometime this month. All right, so sometime this month, I think we'll see a bottom, and then we'll bounce into the fall. So we'll find the bottom, and then we're going to see a good uptick, and it's going to happen for this big presidential cycle that we're seeing. All right, so that's probably about a 3 to 5 months of a bounce. We'll play that. We have a lot of positions already lined up, ready to play those bounces, and then we'll ride that up into the presidential cycle. And then it looks like we'll have another crash, like I'm saying, and it also lines up with potentially letting the virus come back, right? So a lot of people are afraid that summer will come, the virus goes away, and then fall comes back and the virus comes back. So it kind of lines up with that chart that shows that another really big crash could be right after that. All right. Now, I want to emphasize, let me state, this is not a time to be scared. This is not a time to panic. I want to emphasize that there's lots of opportunity. All right. This is if you get this right, if you play this right, if you know what to do, there's a lot of short-term money to be made here. There's lots of opportunities everywhere. All right, now we'll look at one more chart. Let's see, I got one more chart here. So this is the 2000 NASDAQ, and we see the exact same thing here, right? So we had this 40% crash in 2 months. Here we had a 60% retrace before it continued to fall again. So you can see, time and time again, historicals are always there. And like I said, we can blame the virus as like the pinprick, but the markets were ready for this. All right, now one more time. We already looked at this chart. This is the VIX chart again. But like I said, assuming that this VIX chart peaked in March 18th, then I think the bottom is going to be somewhere right in mid-April. All right, so to recap this, to give you the summary here, my best guess as of today, looking at all the data that I have on the virus outbreaks in South Korea, China, Italy, what's going on in the US, is that my best guess today is that by mid-April, we're going to see the peak of this. All right, so it's going to get worse. The peak's still in front of us, but we're going to see the peak then. All right, we'll see the backside. We'll see the downside. All right, that's a good thing, right? So it's going to get worse, but it's going to be good because we're going to see the backside. All right, then I believe that that's when the market will be bottoming out. All right, like I said, they're predicting that it could come back in the fall, in November, but we'll see what happens with that. But I believe that we'll see the bottom, we'll see the peak of the viruses, we'll see the bottom of the market. At that point, we're going to be getting back into the market, and we're going to be trying to look for these 30, 40% bounces. We're going to be buying the leaders. All right. So we'll be buying like the NASDAQ 100, like the QQQ is a really good way to play that. We'll be trying to get these 20, 30, 40% profits out of there. And then the market's going to crash again. So what we're going to do then is we're going to move into safe havens. Now we have a really good idea of what these safe havens are right now because we've just seen this huge crash. So we'll see what's been holding up so far the best. These are the world dominators. Now I have a list of 40 different companies I call these world dominators. These are the best companies in the world. These are the ones that I cannot wait to buy at the discounts we're going to get them in. I believe if you play this right, if we buy these world dominators at the bottom that's coming up here, we could be set for life. Like we can buy these and we can just kind of forget it for the rest of our life. So we'll move into the safe havens, the world dominators. We'll also look at gold, which has been pumping really, really well. And then, like I said, if the virus doesn't come back, we'll maybe look at some bonds. I think that could be good, but either way, we want to be prepared. Don't believe this is just going to blow over. Like I said, it's probably going to get worse over the next couple of weeks. We'll find the bottom and then we're going to play it accordingly, right? So again, let me just reemphasize, good news. All right, good news. There's a lot of opportunity for us to make a lot of money in the short term. In the longer term, like I said, in about the 2-year range, we are going to see the sale of a lifetime, the opportunity of a lifetime. Like I said, if we can buy these world dominators at these prices, we could be set for life. This would be your chance. It's my chance to build more wealth than any time in history. Everything's too expensive. There's no good entries for anybody. Real estate's too expensive. Stocks are too expensive. But to be able to get a chance to buy these world dominators at the prices we're going to get them at can change our whole lives. And so that's the good news. We're going to make some money. This volatility gives us a good chance to make some money in the short term. We're going to make that money and we're going to take it and put it in those world dominators at the sell of a lifetime. And we'll be set. All right, so that's the good news. Like I said, I wanted to bring this to you today, a lot of information. I'll be back in the group doing live Q&A, answering your questions. Of course, I'm always there every day in there, so just go ahead and ask your questions and I'll answer them. And that's it. To your success and your health. I'm out. All right, so that was something different, a little bit of a look inside of some of the information that I give to my private community. I send these out a couple times a week. We do live streams, live question and answer. Of course, I give much more actionable information, exactly what to buy, when to sell. If you want any more information on this, look in the description. I have information on how you can join the private community, how you can be coached, mentored by me, have a whole community supporting you. We're all working together to not only survive, but to thrive, to set ourselves up for the sale of a lifetime. So again, check the description for all the information and you can find out how to join the private community. Hopefully I'll see you inside. I'll be waiting for you.